Have you ever wanted to know how to get into your first real estate deal but have no idea where to begin? Well, today we're going to talk about how to find your first deal even if you have no experience. Welcome back to Money Mondays, everybody. We release new content every Monday to make you a better investor. And guess what? You can learn from us and go out and do your own deal. Or if you don't want to do all the hard work, you can invest with us. We have over 700 million in assets under management. We have bought and sold over 5,000 units across the Sun Belt in Texas. And we provided over 20% average annualized return to our investors on all of our deals. So step number one, you want to buy your first deal. So what do you have to do? You start by researching how this works, right? You got to get yourself educated. You have to read books, listen to podcasts. There's a lot of content online that's free to very little cost. Get yourself an understanding of how investments work, what the risks are, what areas are good to invest in, what type of properties are great to invest in, right? And soak it all up. It's going to feel like a fire hose, but I'm telling you, that is what you have to do as step number one, because if you try to rush into your first deal, not having a good foundational education on how this works, you're going to get taken advantage of, you're going to potentially lose money, and even worse, you could potentially lose your investors' money. So another thing that you're going to have to think about, right? You've gotten yourself educated, you're trying to understand the mechanics of how this works, right? But building out the right team members, building out the right partners, right? And I'm not talking about people that are going to go do deals with. Yes, that's important, and we'll get to that here later in the video, but we're talking about the vendors and the people that will ultimately help you find a good deal, close the deal, and potentially manage the deal on the back end, right? So who am I talking about, right? I'm talking about a good lawyer and a legal team. And if you're going to syndicate, you need to have an SEC attorney. So not just, Joe Bob, that's your cousin's friend that is a lawyer and knows how to put paperwork together. These are very specialized documents that need to be done by the proper people, right? Having a good title company is a great contact or vendor to have. Having the right insurance agent, somebody that knows how to put insurance onto commercial real estate is so invaluable right now. I mean, insurance costs have gone up substantially, and having the right vendor is very, very important. Having the right mortgage broker, understanding what type of debt products you can put or loans that you can put on these deals is very, very important. And a great mortgage broker will shop multiple lenders and get you the best deal on whatever, loans that are out there. And then ultimately property management, right? How are you going to manage the property? Do you want to get the call at 2 a.m. that somebody's toilet's backed up and you got to go out there and plunge the toilet? Or do you want to have a third party professional property management company that's going to manage these assets on your behalf? They will ultimately show you the way as to how to close the deal, what rents you can charge, how it's all going to work. So again, building that team is part of that educational foundation that you really need to have whenever you're buying your first deal. Now that you've gotten yourself educated, you've gotten some vendors on your team, you need to determine what are our investment goals? What are you and your family trying to accomplish by you getting into commercial real estate and syndication? It's very, very important to understand, hey, I want to invest in Houston, Texas, and I want to invest in Class A, and Class A would be 1990s and newer product. And I want to invest in a project that's 100 units and above. Those are very specific things. And you're gonna say, well, why does that matter? I'm just trying to find my first deal. It's because otherwise you're gonna get scattered. You're not gonna have that specialized knowledge that you need in order to be successful. Don't underestimate this process. Find out what your buy box is. We've talked about this on the show plenty of times, and you need to be super, super detailed and stick to it. Because once you know what your investment goals are, you can go out and pseudo pitch your investors as to, hey, these are the types of deals that I'm gonna be looking in. This is the areas that I'm going to be looking in, and these are the types of returns that we're going to be potentially projecting. And then you can kind of feel out your investors in terms of, are they going to accept that type of deal, or maybe they want something different. Then maybe you have to shift, but you have to set that buy box and you have to adhere to it when you go out and actually try to find your first deal. Once you have that buy box, now it's about going to the real estate agents. They call them brokers in commercial world. So real estate brokers are typically the ones that are doing 99% of the deals. So once you have your buy box, you got to go and talk to them, build rapport, explain to them what that buy box is, so then they are out there looking, keeping their ear to the ground, trying to find those opportunities for you, and then boom, whenever you find one, you underwrite it, you get it under contract, you close it. So when you're trying to buy your first deal, make sure you don't get the shiny object syndrome. The squirrel that finds another nut over here and another nut over here. Whenever we're getting into real estate, we're really, really excited. I was excited too 10 years ago when I got into single family. I'm still excited now, right? But you have to shift your mindset to be more of a specialist, not a generalist. Real estate, you can make money 1,000 different ways, but you need to determine, hey, these are the 1 or 2 strategies that I want to implement. I want to become an expert in this. I want to dive deep. You can dive deep for a while, become an expert, and then you can go horizontal. So I always tell people, don't get caught up in the flash of, this or that strategy. Find out which one works for you. Find out which one that you can ultimately be an expert on, and then dive deep on that. So we talked about this a little bit earlier in the video, right? But building a strong network is key, right? And what am I talking about? It could be anything from investors, right? If you're gonna go syndicate or raise capital, you need investors, right? So you need to go out and network with these people at these various events. Partners, we talked about this on the show, it's a team sport. Now we know people that do it on their own, and that's fine. Maybe if you're listening to this video, you're probably very type A like I was too, but what I found out from a partnership perspective is if you find the right partner, which I have in Ferris Musa, 1 + 1 doesn't equal 2, it equals 3. So we're talking about investors, we're talking about good partners, and then we're also talking about the vendors and the people that are gonna make you successful in this business, right? Again, it's a team sport. We can't do this all on our own. So we talked about insurance agent. We talked about mortgage brokers. We talked about, good title company. Good legal team is very, very key to closing. And then ultimately, whenever you buy the property, you've closed your first deal, you need a good general contractor. Who's gonna go do the work? Are you gonna swing all the hammers and run the crews? Maybe that's the type of person you are. Maybe you have a construction background. That's fine. Most people need to have a good GC, a good general contractor that can go out and help implement that value add business plan. And then most importantly, after you've closed, is having a good property management company. This is where the rubber meets the road, folks. I cannot stress this enough. If you got anything out of this video, it's that you have to pick the right property management company. And it could be a third party, or maybe you decide after you've done a few deals that you want to start your own management company. It's a big task. It's a lot of work, but I always encourage people to do it once they've had enough experience. But those are the people that are going to implement that business strategy and hopefully allow you to have not only cash flow during the hold, but ultimately exit the property for a profit. You've built your network, you've gotten yourself educated, right? You've determined what your buy box is, you found a deal. Your real estate broker finally gave you a deal that makes sense, it's penciling in. Now you wanna look into, how am I gonna get debt or a loan from a lender on the property? So securing financing, putting the capital stack together, which people might hear online, it's a very kind of snazzy word and way of kind of describing what we're trying to talk about here. But it's essentially, how do you structure the right loan with the right equity stack on the deal, right? And so who's gonna help you with this? Well, the equity piece is typically up to the sponsor or the GP or the syndicator or the person putting the deal together. You gotta have cold hard cash to put down as a down payment, and typically you're gonna have reserves and escrows on top of that. But your mortgage broker, if you've got a great one, is gonna be able to determine what is the right loan for this specific property, this specific area, and maybe this specific business plan, right? Putting long-term debt on, on a heavy value add flip type deal where there's down units and you're having to put a lot of money into it and you're buying at a great basis and you're gonna increase the value, is not the right play, right? You need to put bridge on that, because ultimately you're gonna increase the value so much, you're gonna be sitting on a pile of equity. And if you have long-term debt in there, the only way that you're gonna be able to realize those returns is by selling it. And by selling it, you're gonna have a huge prepayment penalty. So if you have a huge value add play, you get a bridge loan on a short-term basis, you increase the value through doing all your value add and your CapEx through that general contractor that we talked about earlier, and then you ultimately refinance into a permanent loan. So you need to understand how all of this works. There's a ton of information out there in terms of different loan products and different lenders, but you need to make sure that fits within your buy box, that fits the investment and returns that your investors are looking for, and that you can ultimately go out and execute on that business plan. But securing the right financing in today's market, especially with interest rates that are up, you have to understand what you're getting yourself into, because right now on bridge, you're probably anywhere from 8 to 10%. And then on a permanent loan, which comes from Freddie Mac or Fannie Mae, you're gonna have typically anywhere from 5 to 6%. You're gonna say, well, wait, 5 to 6% is a lot better than 8 to 10. Yes, but they're two totally different products and they're meant for two totally different business strategies. So again, that's why it's key to dial in, what is your buy box? What's your investment thesis? How long are you trying to hold onto the property for? What level of CapEx is needed at it? Where's it located at? And then you determine with your mortgage broker and your partners what product is the best one for it, right? So securing financing is huge. in buying your first deal. All right, so that broker that you've built rapport with, that you're a friend with, that you went golfing with, that you're asking about their children and where they're going to college at, right? They finally sent you a deal, right? 6-12 months later, it's crazy, it's taken that long. Well, now you have to perform due diligence, right? Because from up until that point, it was all financial due diligence. Does the deal pencil in? Are returns there? All you're really looking at is spreadsheets, right? And reports. Now you've gotten a deal under contract, right? So now what do? People are typically a deer in the headlights, but that's where a good property management company and a good GC are gonna be worth their weight in gold, right? Because once you're under contract, within the first week, you need to be performing on-site due diligence, not financial due diligence, on-site due diligence. And what does that entail? Ultimately, it's two different things. Your property management company is gonna perform two functions. They're gonna do a lease file audit, which is essentially determining, did the leases or what is on the rent roll and on the T12, is that backed up by what the leases are on the property, right? Are the people essentially paying the rent that the seller is telling you that they're paying, right? You're determining if they're blowing smoke or not, right? Then on top of that, your property management company is going to do a unit by unit walk, right? And what are they trying to determine there? They're trying to determine, is the occupancy the correct one that was on the rent roll? Are there any units that are really, really bad? Are there some hoarders? Is there other illegal activity that's happening at the property? And on top of that, the property management company, if they're good, will also kind of do a general exterior and amenity date and inspection as well. And then they're also going to shop the comps, right? And shopping the comps is important because, again, from up until this point, you're just essentially taking what comps that you could find from either a CoStar or what the broker told you. Now they're going to say, what are the real comps in the area and what are they charging in terms of rents, right? And then they bundle this all up and it becomes a report that they provide to you as far as due diligence goes. Now, that's one phase. Phase two is your general contractor. What are you walking the property with that guy or that gal? It's ultimately determine what is your CapEx plan. Are you gonna paint the property? If so, how much is that gonna cost? Is there roofs that need to be replaced? If so, how much does that cost, right? You have a bucket of money that you have put into your financial underwriting that you are hoping is gonna be enough, and sometimes it's not, sometimes it's too much, right? Your general contractor is there to dial in, what are you trying to get the best return on your investment with? How much is this stuff gonna cost you? How quickly can you get it done? And then ultimately, based on what's the reality of the property and the situation, does that number still make this deal look good? And there's gonna be some times when it doesn't. We've been on properties where we're about to buy and we've done plumbing inspections and the whole thing was corroded and it was gonna cost us $1 million. And you have to have those tough discussions with the seller and say, hey, look, I underwrote this with the assumption that the plumbing was good. I came back out there, we've verified that it wasn't. It's gonna cost me an additional $1 million. And that becomes a discussion between you and the seller. It might be a tough discussion and it might lead to you not buying that first deal. But I'm telling you folks, this is the time where you pop in the hood and you really need to be prepared to walk away if you don't find something that's right on the property. Thanks for joining us today on how to find your first deal, right? So we know navigating in today's market is tumultuous, right? It's 2023, there's interest rates, there is inflation, there's all kinds of crazy stuff. So we created Disrupt Equity to provide turnkey, prepackaged investment opportunities for people that say, you know what, I'm just gonna invest with the guys that know what they're doing, right? So if you love this video, please take a look at it. Please like it, share it. Ultimately, we are trying to make you a better investor. Ultimately, if you have any questions or comments, drop them in there for me and Ferris, and we look forward to seeing you next time.